Hey, what's going on, guys? Let's talk about in terms of if you guys wanted to learn to trade how. I'm going to talk about in terms of how to trade any market in 10 minutes, right? In any market that you want to trade, whether it's stocks, futures, currencies, options, don't really matter what market it is. But in less than 10 minutes, I'll tell you exactly how to trade those markets. Few things that we'll be covering on here. Number one is trend direction. Number two is how to determine the support and resistance, the candlestick patterns, the chart patterns, and of course the position sizing. So in terms of trend direction, we want to take a look at in terms of the moving averages, right? So a couple of ways you can try to determine what the trend is. Easiest way to do it is using a moving average, which is a 200-day moving average for longer time frames. If you're a shorter-term trader, maybe you're looking at a 20-day or a 50-day moving average. Or we can try to use higher high, higher lows, right? There's another way to look at the trend direction if it's actually trending. Or if you want to see, you also want to take a look at the momentum. I mean, the stock might be going up, but is there any momentum in the trade, right? So we'll take a look at those ones. And the next and the least is the trend line, right? I mean, you can simply draw a trend line. So let's look at the trading charts on here. So I have this NVIDIA chart, which has, if you look at the daily chart, it's a 200-day moving average. I mean, if you try to slope it up, if you try to look at the 200-day moving average, we can clearly see the stock is above the 200-day moving average, right? And there is a 50-day moving average and a 20-day moving average. So 200 is a longer time frame, 50 days is a shorter one, 20-day is the least longer one, right? So look at the moving averages. You can clearly look at if the price is above the moving average, this price is should be traded on the long side. If the price is below the moving average, it should be traded on the short side. So if you're a short time frame trader like me, you want to be really following the 20-day moving average because you're not really looking to hold positions for too long, right? Depending on your account size, you might be comfortable with 200-day, but with my account size, I'm more than happy to trade on a 20-day moving average. So as long as the stock is above the 20-day moving average, I want to be trading the stock on the long side. So that's one way to determine the moving averages. The next one way you can take a look at is the higher high, higher lows, right? So when we take a look at this particular stock in NVIDIA, just run a weekly chart makes it a lot easier. So higher high, higher lows. So what we want to see is this is the first move up, right? So this is the first higher high. So if you take a look at this NVIDIA, this is the first higher high. Let's try and draw this on here, right? I'm not sure why this is so big on here, but let's make it smaller. Okay, so this is the first higher high that you see, and the next low that you see on here is over here, right? Then you see a next high. So this is not really a higher high, higher low situation because the price did come back over here, right? But if you look on the bigger time frame, right? Let's say if you were looking at the stock somewhere over here, right? So you want a higher high and a higher low. So we're trying to find where is the higher low, right? So the higher low is right here. Now, a couple of ways you can do it is, I mean, if you try to buy it over here and try to see the break of 120, that's one way to do it, but you know what, you will actually get stopped out, right? I mean, so you really want to see, you want to have a low price entry and try to see if it can, the first target should be for the break of the highs, but if it doesn't, I mean, if you have your entry over here somewhere around 106.50, you want to take it off at 120, and if it comes back to 106.50 or something, you want to take it off, and then you try to see what's going on again, right? What's going on again is when you see this price again, I mean, right now, if you see this bigger picture, this is actually the higher high, this is a higher low, and now when the price breaks 120, now you have a confirmation of this price actually trending, right? Same thing if you look at, let's say, something like Micron, right? Same situation. You have this trend over here which goes up, right? This is a higher high, higher low, higher high, higher low, right? So if you try to draw these trend lines, draw this over here, right? So this is a higher high, and then you see a higher low over here, right? And then you see again another higher high, and then you see another higher low, right? So if you see this situation on here, or if you just draw a trend line left to right, you see the trend is on the upside, or you can just see the higher high, higher low. There's another way to do it. So three ways that I've shown you right now is just using moving average, higher high, and higher low. Now, the momentum is kind of key to know, right? One thing that I've noticed is when you try to do on a if you're trading shorter time frame, if you do have this RSI indicator on here, 14-day RSI, which is the 14-day relative strength indicator, as long as the price is above this $50 range, you want to be trading in the direction on the upside, right? So once you determine the moving averages, the higher high, higher low, or the trend line, so one of the ways you're trying to find which way the stock is actually going to trend, now you want to see where is the momentum, right? You want to see as long as the price is over this 50-day line, you want to be trading on the long side, right? If you see as long as the price is over the 50-day, there's been really significant move. Once the price falls below 50-day, there's really no move going on anymore. And once the price, let's say over here, right? Let's say over here back again, you want buy on the long side, same thing. And once the price actually starts breaking below the 50, 20, 50, there's no trade anymore. Same thing, let's say we trade something like Nvidia again. As long as we understand the direction, as long as the price is over the 50-day, the 50 line over here, you have a lot of opportunities. Once it falls below 50, there's no more momentum in it, you want to get out, right? So that's a way to look at trend direction and the momentum. Next thing you want to look at is in terms of support and resistance. So support and resistance is really the area at which the price is going to change its direction, right? So I mean, if you take a look at this one, Nvidia again, if you take a look at this one, where has the price changed its direction, right? So if you look at this, a couple of times the price has tried to come over here, reverses, support, right? Try to gap down over here, support again. So this is an area where a lot of buyers and sellers are sitting over here, right? So they were sellers over here before, but now became buyers. Again, if you want to take a look at again, let's say if there is another level over here, right? So again, once it tries to break, solid break, comes back, becomes support again. So this is another good region where people are actually willing to participate. If you look at, let's say in this region, right? So keep in mind, support and resistance is not a particular price. It's more like a region where people are looking to buy or sell. So, I mean, this is a region where it broke, came back. I mean, there is no power. And so you have this all this gap up, gap down. Once it clears these levels again, you have this trend again. So that's another way to look at support and resistance. Next, you look at it is candlestick patterns. So candlestick patterns is something like a doji, engulfing candle, or pin bar. So if you're looking at dojis, this is like a doji on here where there's an indecision. Generally, you will see a trend pause, right? Doesn't mean the trend is going to reverse. It's just a pause, right? So I mean, if you're trying to find an opportunities, right? Let's say you look at something like, say you want to trade Tesla, right? I mean, once the price goes up, right? You have this small pause, goes up again, small pause, goes up again, right? You have these small pauses, goes up again. So this is more of a trend pause in the direction of the trend. And after the break of the particular candle, you can actually trade on the long side. When you talk about bullish engulfing candles, we're really looking at this kind of candles, which is a big giant green bar, or maybe a big giant red bar, which is a bearish engulfing candle. So this is pretty bullish in nature, right? With the price not only gapped up, the price actually opened at 287, closed at 298 with this significant volume down here, right? So it's a pretty significant volume with price, so it means people who are actually buying it is actually pushing the price up, right? So that's a pretty significant. Pin bar is another one to see in terms of reversal candles. Something like this is considered as a pin bar where the price actually closes near the top of the range, right? I mean, after a few days of drop, you see this price couldn't break down again. It actually found a reversal pattern, and once you know it, once on the break of this 318, it actually popped pretty quick, right? So once again, price drops, you have this reversal pattern, and then you actually have this gap up, right? You will see this multiple times happening again and again. Try to see once again, price drops, you form this pin bar, which is price tried to push downwards, came back up, close over here. Once it breaks the highs, is off to the races. So those are the candlestick patterns. Two chart patterns that is more commonly used is the cup and handle pattern and the falling wedge pattern. Cup and handle pattern, if you take a look at, say, something like, let's say we're looking at the trading desk, right? So cup and handle pattern is you have this up move, right? You see this cup and handle pattern over here, break of this 85, and then it has this up move again, right? So this is a cup and handle pattern that you're looking at. Let's look at other names, say something like Lulu, which has been pretty strong. You have this up move, right? It comes back, break of this pattern, goes back again, right? On the bigger time frame, if you look at weekly, same theory, right? You have this up move, you have this handle over here. Once it breaks this handle, it has this up move, right? Same thing with, let's say if you want to trade, say an Apple stock, right, which is the most common one which people use. Same theory, right? You have this up move, came back. Now this is a falling wedge pattern as well, right? So you have this falling wedge pattern which emerges before the cup and handle pattern. So if you are confident the trend is to the upside using either the higher high, higher low situations or the moving average situations, keep in mind you want the moving averages, the RSI to be over 50 as well, which is in this situation. So you have this higher high, higher low, above the moving averages, above the RSI. Now, once you see this break, this is a falling wedge pattern, and this is a break of cup and handle, right? So this is a falling wedge pattern, and this is a cup and handle pattern, right? So you see if on the daily chart on Apple, same situation going on, happen right again. You have this up move, it has this falling wedge pattern, right, which is you can consider is over here, and if it breaks this one, then this is a cup and handle move. Something like you see on Baba again. You see this up move forms this pattern over here, and once it breaks this cup and handle, this is good to go. If you look on the weekly one, same situation, a bigger time frame cup and handle situation going on over here. So yeah, I mean, if you're looking at in terms of trading names, that's really the easiest way to understand. Number one is trend direction, trying to use moving average to see which direction the trend, which direction the stock is trending. Then you look at support and resistance, see where is the chances of it to reverse. And once it does reverse, you want to see these kind of candlestick patterns that we talked about, the doji, the engulfing candle, the pin bar. And last but not the least, you want to find a chart pattern to actually trade against. Position sizing, you always want to trade at least one risk, maybe 1% or 2% of your capital. So if you have multiple blow-ups, I mean, if you have 1% risk, you have to blow up 100 times, lose 100 times to actually blow up your capital, right? So if you are a new trader, maybe you start even at 0.5%, right? I mean, if you have no clue about trading, use 0.5%. You know what? You're allowed to have 200 wrong trades to actually have any significant blowout. If you don't, then you should be fine. So that's to trade the market in under 10 minutes. Any questions, hit me up, let me know.